Hi everyone, welcome back to Be Rich. I have Shashwat with me here. We're streaming again. So if there are some lags here and there and the audio quality isn't up to spec, I'm sorry. We're doing our best. We're improving on this, trying different methods and different mics. And I'm sure eventually we will nail it down to getting great quality in terms of video and audio, not only the content. Today, as I said yesterday, I wanted to talk about China, and there's been what do you call comments made that I am personally talking very positively about China. That everyone seems to be thinking that I'm saying that everything in China has become hunky dory and everybody's running to China because there's some great gold rush happening in China. That is far from what I was trying to say. That is why it's important to get Shashwat in, because I want to explain to you guys in a way you understand what gambling is and why these people take bets like this. So you understand the context of what we're saying. It's not that as a value investor we're talking about China here. If that was the case, you'll see Warren Buffett himself, who's sitting with a crazy load of money rushing to China. He's not rushing anywhere. So to understand this in context of all that, I thought I'll have Shashwat here to explain to you what is happening in China and what has been promised. And none of these promises have actually been implemented as yet. And without wasting any more time, Shashwat, please tell us what's happening in China.
We have to understand that what China is struggling with. So China has been struggling with an aging population. Its population is aging. Its population has in the past been one of its greatest assets in economic performance. But today, that population seems to be aging because of their one child policy, and this is a very well known issue. And the second thing is the fact that China mismanaged COVID. They instituted the zero COVID policy and it took a huge toll on their economy because they artificially brought about a deflation in their country. And this was something which was, of course, not favorable for the country because economic activity went down. And it's very hard to revive an economy when its economic activity goes down. And China has been missing a lot of the growth marks which generally people expect from a country that is supposed to be one of the fastest growing nations of the world. So it also has recently gone through a property crisis. It is going through a property crisis where they have been issuing development projects all over the country where people have been putting their savings into property, and suddenly the value of property has come down dramatically because there aren't enough people to purchase these properties in distant places and live there. So the supply for property has gone far ahead of the demand for property, and what has left is that you have all these different apartment complexes with multiple apartments with no one there to live in them and no one there to even demand them at this point, even as an investment. So Chinese investors have been taking this savings which they have and they've been trying to put it in other avenues, mainly the bond market in China. And let's say that China has also been promoting very unconventional, or rather, not very, but unconventional fiscal policies, where they've been doing the opposite of what a country would be doing when it's going through an economic crisis. So, suppose your economy is doing very poorly, then you wouldn't try to get the rate of interest higher. But China did do this because they felt that investors were pushing the bond yield artificially low. So they tried to push up the interest rate yield, which doesn't make much sense when your economy is underperforming. And another thing is that they were very slow to the punchline of actually trying to get their fiscal policy loose, or rather to redistribute some income back to the people who need it, because consumption has been quite weak in China. Companies like Nike and other tech companies which sell their goods in China have basically lost a lot of income which they could have had if China was actually in a better economic state today. So, all this said, what has happened in China over the past few months, which has led to a lot of people being a bit more optimistic about China? So, one thing to note is that just because the fiscal and monetary policy of China has now been geared towards loosening, doesn't mean that it's immediately going to solve all of China's problem. In fact, I would say it's unlikely that its problems are going to, be solved in a matter of a few months or even a few years. It's going to take a while to do it. So, what is the Financial Ministry of China said? The Financial Ministry of China has basically said that it has 4-point intervention where in 4 different areas they're going to basically provide some sort of stimulus. One, they want to support real estate investment. Two, they want to help local government debt. Three, it wants to boost lending into the real economy. And four, it wants to support consumers. So, whether how China is going to go about this is a little difficult to tell because they are secretive about their policies. But we have some indications of what they may be doing. So first off, it announced that it will issue bonds to local government to be able to buy back idle land and unsold homes from developers. So this is basically easing the excess supply in the property crisis, and it's trying to push back some of the prices. Because let's be clear about one thing: if let's say a lot of the household savings goes into this one asset class, and this asset class's price goes down completely, this means the household feels poorer and is probably poorer, and they're unable to purchase as much as they would otherwise. And if they're not purchasing, that means the economy is not going to do as well as it should be doing. So, one way in which the government is trying to combat this is to buy back idle land and new homes which have been unsold through local governments by issuing them bonds. There is a problem with this if they go through with this. The problem is that one, we're already seeing that local governments are excessively indebted. I doubt whether piling on more debt onto these local government bodies would be a good idea as far as we're concerned. And secondly, let's look at lending and consumer support. So, if you look at lending and consumer support, it's clear that lending is a big problem in China, where a lot of people are unable to get loans to do things. And shadow banking is a big feature of Chinese life. So, I don't know how the government is planning to fix this problem. I don't know how they're planning to get lending out to the real economy. It's going to be something which we have to watch. And giving consumer support, unless the Chinese government is directly handing money into the hands of people and saying, please spend, I don't know in what way they're planning to give out consumer support, because this is something which we haven't seen in China happening to the extent that it should be happening now, because China hasn't had the kind of problems that it's having today. So it'll be left to see how China is going to bring about consumer support or support of consumption in their country. So, given these points, and given the fact that there is no straight road ahead for what China is going to do, another important point is that China doesn't believe in giving out consumer support beyond a certain point, consumption support beyond a certain point, because it's a government which is focused on certain levels of metrics, and once those levels of metrics are reached, they're happy to take off their foot from the gas pedal. So they've taken a long time to even get to this point of fiscal loosening and monetary loosening, and I don't know whether go forward with it in the pace that they need to help aid the economic problems they have currently. So what do you think about it?
Yeah, and you got to remember something about China. China is a very confusing and paradoxical situation to start with. They're a country which is communist and they abhor Western ideas and philosophies. At the same time, their growth is completely dependent on trading and free trading with what we call flourishing democracies around the world. So they hate capitalism internally, but they love it outside, right? And they have two kinds of economies: the outside China economy and the internal China economy. And even if you see their current premier, the way he talks and the way he's approaching the world, it's very confusing because he's doing the famous thing of looking one side and talking the other side. Because his actions, yes, he maybe his underlings are doing this for the economy and they've said they're going to do all this, but he doesn't seem to be really interested in any of this himself. He's more keen on right now fueling the crisis the world is facing in terms of geopolitically. He seems to be partnering up with Putin and saying, let's do this Whatever help you need, we're ready to assist you. And same thing he's saying with Korea. And he's taken a confrontational stance with US, and especially when it comes to Taiwan. And if you look at all that, doesn't make any sense. A country which thrives on world trade, which thrives on able to participating with open economies, he seems to be constructively trying to destroy it. Meaning, all the actions he takes, Russia doesn't want Western forces, it doesn't want this global economy. Even North Korea doesn't want this. And all what they're doing with China and Iran, they all seem to be against this, what the world we currently occupy in, and the world the way it's working right now. What do they want to replace it with? We do not know, because historically speaking, these four guys, Iran, China, Russia, and even North Korea, don't trust each other. They seem to be friends right now out of circumstance than anything else. So that is what's happening geopolitically. Now, let us look inside what is happening in this two-China economy. Yes, they're doing global trade, and they seem to be facing severe sanctions because of their dumping policies and tariffs across the globe. So they're dumping in different countries, and if one place is blocked, they're using another way, like getting into India through a free trade agreement they have in Thailand. So they dump into Thailand. Through Thailand, we have a free trade agreement, and it's coming to Indian shores. So there are different ways they're dumping things across the globe, and they're facing stiff resistance against this. But that is where they're generating most of their income from. Internally, consumption is down. Chinese sentiments are down. The Chinese population feel like they've been let down by their government, and they seem to be like what Japan was during the crash of the 1980s. They seem despondent. They don't seem very enthusiastic. Whatever little we can understand from their social media is what we're seeing, because it is heavily controlled and heavily filtered. So we really do not know what is happening inside that black box. And second, we're talking about FIIs. And does this mean they think China has become golden and India has become not so great anymore? It's not true. FIIs have their own motivations for investing. They are not value investors. They are not retail investors. Like I've said many times, FIIs are either huge pension house, sovereign funds, which need certain requirements to be met in terms of income generation. So they'll be looking to see where they can move their coin around to get maximum returns. Two, they have a very high risk appetite, because their portfolio of, let's say, $100, $1 is spent on taking heavy gambles in India and China. In turn, if these gambles suddenly pay off and they give a return in 1 year's time of 200%, or 150%, that gamble is worth taking just because they're using $1 out of $100 towards this. To us, being Indians, seeing in the conversion we see it in, we think it's huge amounts of money. But when you see it from their perspective, where they're sitting in their quantum of money, this is a very small bet they're taking here and there. And yes, it adds up when you look at it in the number of FIIs around the world who are placing these bets. It looks like a large volume. I understand that. But their motivations for doing this is very different from us. And it is not a comparison of Indian economy with the Chinese economy in any sort or any manner. That is very evident if you look at all value investors who around the globe who you follow and who you listen to. None of them are harking and shouting on the rooftops about China. What people are talking about China are people who are traders. And the traders who the media also fosters and enables trading, because that's where the money is. All media houses around the globe work on advertising and viewership. And trading is what gets you viewership. Even in India, we are constantly fed in by our media to do trading and to look at trading, to always constantly talk about price volatility on a daily basis, as if it's very important to know every second what is happening to a price. It is not important. And these analyses are all, as a value investor, it doesn't mean much. But the reason why me and Sashwath spoke about China and why it is happening is to give you an explanation, because as a value investor, new investor, you feel very nervous when you see a stock which is like Manappuram or any other stock correcting by 20%, 50%, like Tata Motors severely correcting. You start wondering, is there something wrong? Is there something wrong? No, there is nothing fundamentally wrong, because you can see it with your eyes. If you follow the news and if you read and consume the news, company-wise, I'm not talking about market news. I'm not talking about all this noise news. I'm talking about the companies you're investing in. You read that news and see there is nothing fundamentally changed. And so we're trying to give you an explanation to what is happening. But some of you are misunderstanding to think that we're talking about China being amazing and India not being so great, and then in the short term, long term, none of that is true. And that is what Sashwath is also trying to elucidate here and explain clearly what is happening inside China, what is the government really doing, and how much the government will be willing to do also. He says we have to wait and watch and see if they really follow through with what they're saying. Because that is very evident in China. They say lots of things, but finally, end of the day, we have seen historically, they don't follow through with a lot of things they say. And it can be very confusing as investors to see this. This is what I wanted to say, Sashwath.
Yeah. So yeah, that pretty much sums up what we think about China. It's mainly just wait and watch. They have a lot of troubles within their own borders, and some positive news has been taken as investors. I mean, not even investors, let's say traders. Well, that's their prerogative, of course. But sitting here, yes, we do feel the impact in the way Mr. Market decides to value our stocks based on what happens elsewhere. But that doesn't mean that it's a fundamental reflection of something going wrong with our stocks. Yes, maybe it's possible that it's also because our stock market is overpriced, and that may be a reason why it's easier to take a lot of air out of balloon which is already filled up to the max than it is to take out air from a balloon which basically has no air in it. So in that angle, I think that yes, it may be an indication that if any news, even if it's not negative for us but positive elsewhere, could mean that our market faces a decline. That could be an indication of our market's own valuation more than anything. But apart from that, I think that unless something fundamentally changes about what we're holding and what we looking at or investing in, I don't think it should matter as much. But it's good to keep a worldly view when you are investing, so you know what's going on everywhere.
Correct. And this reminds me of being a father of two. It reminds me of sibling rivalry. When I walk up to one and say, I love you to one, immediately the other one chimes in saying, so you don't love me? That's what Indian investors, retail investors, especially value investors seem to be feeling. When FIIs walk over to China and say, China, we love you. Indians over here suddenly say, so you don't love us anymore? It's like that. It's not true, right? So keep that in mind. What you should be focused on is opportunities. And if you've been doing an analysis like what me and Sashwath have been saying, or Anand has been saying, you should have your list of companies which you know fundamentally everything about, and businesses which make sense to you, which you are confident in. And when you see these opportunities, enter very slowly and not with a bang. A lot of people saying that we're taking cover between this Tiffin coffee range, but we're not taking cover. We have nothing to lose here because we're not taking your money and we're not investing it for you. You're doing that for yourself. So we want you to be prudent and not get carried away. That each of you should do assessment on an individual level and based on that, invest. And please, for heaven's sake, get yourself a financial advisor who's SEBI registered and follow and listen to what they have to say. And don't invest based on these kind of mood swings in the market. You'll only end up getting hurt because you will not be able to follow through in any of this and keep it committed. So this is the main thing which I wanted to add in to what Sashwath said. Anything else you want to say, Sashwath?
Yeah, stay in tune for tomorrow's video because it's going to be good. We're going to be talking about Howard Marks, where we step away from all the noise. I'm glad to be done with, glad that we've discussed a lot of the noise that's going on in the markets. But tomorrow we'll be covering Howard Marks's memo. So I hope that all of you stay in tune and watch that memo because I think what he says is going to be very pertinent to what is happening today.
Correct. I agree with Shashwat. If you are going to miss our entire video for the week and only see Sunday videos, this is a video you should not miss. If you missed all our other videos, we can be forgiving on that because we understand watching noise videos is not great fun if you're a value investor. But tomorrow's video is purely for value investing and what a great value investor has been saying and why that is pertinent to us, especially as value investors. So definitely do catch tomorrow's video as Shashwat breaks that one down for you. So thanks for watching the videos today, guys. Please do like and subscribe and share it with friends and family who are suffering from severe anxiety being in the market. It will probably help them ease their anxiety, hopefully. And do comment down below. As you see, we do read your comments and we do try and get you content which is tailored to your comments. Other than that, nothing else much more to say. See you on a Sunday evening tomorrow. Thank you.
Thank you. Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moat investing.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.